Are mortgage rates finally on their way down, or is this just another fake out? If you're thinking about buying a home or refinancing, you need to hear this. Mortgage rates just hit their lowest level since December, but with the latest inflation report and Federal Reserve updates, things could change fast. So stick around, because understanding what's happening right now could save you thousands on your next home loan. Hi everyone, I'm Mike Petras with NPRE Boise, and this is your weekly mortgage market update, covering everything that happened from February 24th to the 28th. So if you want to stay ahead of the market trends, be sure to hit that like button, hit the subscribe button, and share this video so more people can make these same informed decisions. So last week, mortgage rates dropped to their lowest level since December 12th, which had a lot of people wondering if we've actually turned the corner. But just as quickly as rates improved, we saw hesitation in the bond market as investors waited for the PCE inflation report to come out today, Friday, one of the most important economic indicators for mortgage interest rates. So what does this mean for you? Well, let's break it down in simple terms. Monday started off slow with bonds holding steady. Mortgage lenders kept rates in line with Friday's levels, but by the afternoon, slight improvements in the bond market allowed for some lenders to drop rates just a little bit. No major economic data was released, but traders were already looking ahead to the Friday's PCE price index report, the key inflation report that can determine what happens next with mortgage interest rates. Now let's pause for a second. What does this all mean for you? Well, if you're watching housing trends or considering a home purchase, even a small drop in mortgage rates can make a huge difference in affordability. So for example, if rates were to decrease by just 0.1%, that means that you could save hundreds, if not even thousands of dollars in savings over the life of your loan. So if you're wondering if real estate is a good investment, the current downward trend in rates could mean more buying power for you. Let's say that you're looking at a $500,000 home and planning to put 20% down. Well, if rates drop from 7% to 6.75%, your monthly mortgage payment can go down by about $70 per month. That's about $800 a year back in your pocket. That's enough for a vacation, home upgrades, or extra savings for emergencies. Tuesday was when things got interesting. Bond yields dropped below 4.30, which helped mortgage-backed securities improve. And what does that mean in everyday terms? Well, think of mortgage interest rates again like a seesaw. When bonds are up, mortgage rates usually go down. And over the past few days, the 30-year fixed mortgage rate dropped from 6.87 last Friday to 6.74 by Thursday, making it a steady decline. To put that into perspective, if you were locking in that $400,000 mortgage, this small rate drop can save you $30 a month in payment. That's $12,472 over a 30-year loan. Imagine what you can do with that money. Pay off other debts, invest, or simply have more room in your budget. So what caused this drop? Well, it wasn't just one thing. It was a mix of lower energy prices, concerns about slower global growth, and expectations for economic policies that changed the investor sentiment. When investors worry about the economy slowing down, they tend to put their money into safer investments like bonds. That increased demand for bonds and led to lower mortgage interest rates. Wednesday followed a similar pattern, with stocks and bonds moving in opposite directions. Whenever the stocks took a hit, the bonds improved, keeping rates stable. So the big takeaway, the bond market is leaning towards lower rates for now, but any surprises in inflation data could change that quickly. The takeaway here, rates are still the lowest we have seen since early December. So the big question remains, will mortgage interest rates go down in 2025? Or is this just a temporary dip? Well, Friday, today, was the big day, the Personal Consumption Expenditures Report, or PCE. That was released, and it showed inflation rising 0.3% for the month, bringing the annual core PCE rate down to 2.6%, down from 2.9% in December. This is great news for mortgage interest rates because it suggests that inflation is cooling, which could increase the likelihood of a Federal Reserve rate cut later this year. Now, let's talk about why this is great. Well, the Federal Reserve has been hesitant to lower its interest rates because inflation has been stubbornly high. But if inflation continues to cool, that means that they could get to rate cuts sooner rather than later. And right now, the market is predicting a possible rate cut by June. But the Fed has made it clear that they want to see a longer trend towards lower inflation before making a move. Another big takeaway from the report is consumer spending actually fell by 0.2%, even though the personal income rose by 0.9%. This tells us that even though people are making more money, they're not spending it as freely, probably because of high borrowing costs. If this trend continues, it could push the Fed closer to cutting rates, which would be great news for home buyers and those looking to refinance. So where does this leave us? Well, as of today, the 30-year fixed mortgage rate ended the week at 6.74%, down from 6.87% at the start of the week. And if inflation keeps continuing to cool, rates can continue to drop. But if inflation data comes in hotter than expected, we could see rates jump again. Now let's talk about what this actually means for you. If you're thinking about buying a home, say here in Boise, Idaho, now may be a great time to start getting serious about your financing options. If rates continue trending down, locking in sooner rather than later could save you thousands of dollars over time. And if you're considering refinancing, even a slightly lower rate could mean major savings over the life of your loan. The key here is staying ahead of these trends, which is why I bring you these updates every week. And of course, one thing to note, while I am not a lender, I am a realtor serving the Greater Boise, Idaho area and the Treasure Valley. But I work with some of the best mortgage professionals across Idaho, California, Oregon, Washington, Arizona, Nevada, Tennessee, and Florida. So if you're looking for a trusted lender, I could refer you to someone who could provide you with the best options for your situation. And looking ahead to next week, all eyes again will be on the economic data to see if this trend continues. Will mortgage interest rates finally break below 7 for good? We'll have to wait and see. So let's talk. If you have questions about mortgage rates or need a trusted lender referral, drop a comment or reach out. I'd love to help. But of course, before you go, don't forget to give me a like on this video, hit the subscribe button, and hit that notification bell so you don't miss out on these videos when they do pop up. And I will see you next week for another update. Until then, God bless, and I look forward to the day that I call you my neighbor.